It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Tuesday evening, September 20th, 2016. Cruising our way through this fourth week of the month of September. Hope you guys had a great week with us so far. We're gearing up for the big FOMC announcement tomorrow afternoon, but that doesn't mean we can't find some reliable trading opportunities in the first half of tomorrow's session. And of course, we got a great plan of attack for you guys and gals this evening. Crude oil is parabolically bullish after this evening's API report. Parabolically, that's a big word. E-mini S&P is trading in a very similar situation as we saw in last night's newsletter. Gold is range-bound, supplies, and of course, Euro is bearish after successfully filling the gap down at yesterday's low. Boy, I have a great newsletter and a great plan for you guys tomorrow. We got a big news report tomorrow morning for crude and the rest of the world, looking at the FOMC report. Before we jump into it, though, don't forget the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of the YouTube video. Follow that link. Come over here and watch the full version of our nightly newsletter on our blog at Sideways Markets. And while you're here, don't forget, join the mailing list. I'll send you an email every evening when the nightly newsletter video is ready to be watched. Download the charts right below the video tonight. You can have all the charts that you see me using in tonight's video. That's right. You can have them on your computer for tomorrow. In the upper right-hand corner, you better grab your free pass. If you're not a member here at School of Trade and you'd like to come out and join me as a guest for a couple days this week or next, grab your free pass in the upper right-hand corner. Come out and test drive the trade room. And don't forget, over here on the right-hand side, you can join the trial membership, learn more about what it means to be a member. Got a bunch of great frequently asked questions. You know what I always remind you guys, you're going to learn more with me in 1 week on my trial than you will anywhere else on the interwebs. I can guarantee you that. And I'm always here standing by to answer all your questions 24/7. Use that live support button on the right-hand side of the website. There's also a live support button on the homepage at schooloftrade.com. Boy, we've had a great few weeks here in the month of September. Drum roll, please. Yeah, tomorrow's a big FOMC announcement. I don't think there's a snowball's chance, and you know what, that we're going to get a rate hike tomorrow. But who knows, right? Who knows? Janet Yellen and co., my gal, right? She's been known to throw a little bit of curveballs out there here, so we'll see what tomorrow brings. Looking at tomorrow's news reports, though, first of all, tonight we got 7:30 p.m., the merchandise trade from our good friends, the JPY. I'm not expecting that to be much of a market mover just because all eyes and ears are going to be focused on this FOMC announcement day here tomorrow afternoon at 2 p.m. Eastern time. So, you know, really, when it comes to an FOMC day, the Federal Open Market Committee meets 8 times a year. It's a 2-day event. That's right. It started off today, right? We had a great day. Like I said, we weren't expecting to see very much of an impact today, but tomorrow, though, think of tomorrow like a Friday, right? Or more importantly, like a late summer Friday, right? It's going to be an early in, early out scenario. And usually what happens is right about 10:30, 10:45, 11 o'clock, we start seeing that volume dry up. Ranges start getting narrower. Watch the ATR indicator tomorrow at the bottom of the chart in the trade room tomorrow with me. And we'll see this thing narrow out. And really the reason why it narrows out like that is just because large position traders are not going to mess with the volatility. And, you know, ultimately, even though volume increases, the volatility increases so much more, right? Because liquidity, right? And liquidity is a big problem, right, during news events. So the bottom line is for tomorrow, is we've got that major report at 2 p.m. Eastern time tomorrow afternoon. But you're going to start seeing the big lot traders scale back positions, especially on markets like gold and the S&P, Euro, of course, right? Crude will probably be the longest mover tomorrow, but we have the inventory report at 10:30. So, you know, if it wasn't for the inventory report, I would say crude should be good all the way until lunchtime tomorrow. But as you can see here, we got the inventory report on crude at 10:30, which means after 10:15, we expect to see some low volume going into that inventory report. And then typically you'd see crude oil pick back up again after, 10:45 or so. But, we may not get that much more out of it tomorrow just because we have the FOMC announcement at 2 o'clock. So watch the clock tomorrow. You should be good until at least 10:30. And then once we see 10:45, 11 o'clock, that's when things start to get a little bit hairy here. And of course, we got the announcement, right, the forecast, and of course, the press conference. I'll tell you, the best TV you're going to see all day tomorrow is going to be that press conference tomorrow, because I have a funny feeling there's going to be a bunch of curveballs being tossed at my gal Yellen, and she's going to have to be prepared, right, to kind of deflect a lot of this stuff, because, of course, the political climate here right about now is it smells like roses out there right now, right? So we know we got the big news coming tomorrow. Be aware of that. Get in early, get out early, right, and then let that crazy train come and go, and then we'll look to play it after, right, the news comes out tomorrow. And of course, we'll be hanging out in the chat room tomorrow, in the trade room tomorrow. I look forward to seeing you guys there, and we'll put together this plan. Boy, I'm looking out of the corner of my eye right now, and I see crew just continuing, parabolic right now. And I was trying to give you a heads up about this 45.20, right, this news double up. But I don't think it's going to even get a pullback here right now. This market is on a tear right now. Crude oil, if you can't see from the chart, is parabolically bullish. And the term parabolic just means it gets steeper and steeper and steeper as it goes. Now, a lot of traders like to fade into this. I'm not a big believer in selling into a move like this. Eventually, it's going to come back. But like I always say, I'm not going to be the one that wants to guess when eventually begins. So I'll never recommend that you sell into a move like this. I'll always recommend that you wait for it to pull back, seller failure, and then fade off the high. Let's talk about this, right? So we're parabolically bullish after this evening's API report. If you don't know the API report, okay, you don't really need to know the API, but if you don't know about it, it's covered in our beginner's course. Okay, we talk about the API report Tuesday evenings, the inventory report Wednesday mornings, along with the FOMC, the non-farm payrolls, and all the other important news reports you can remember, right? So this evening's API report, 4:30 p.m. on Tuesdays, right? And now we're trading at the highs of a bull channel. In fact, we're going through the highs right now. Usually we don't get this much action in the overnight session. This may be because of that FOMC announcement tomorrow. This may be traders just trying to get whatever they can get right now, right before Yellen shuts things down tomorrow late morning ahead of the inventory report, right? So we're trading at the highs of the bull channel, right, through the highs of the bull channel, which means the sellers will be trying to fade the news back to the low of the channel, while the bulls are just trying to stay patient to see if this market wants to hold the support trend line and keep going, or wait for the opportunity to buy this at a cheaper price. Right now, the most reliable trade for the buyers will be to wait for either a two-legged correction off of these highs and then look for seller failure to buy it back up again, or get a strong breakout pullback above the measured move, or the sellers need to finish their work back down to those lows, and then the buyers can look for opportunities off the lows of that channel if this thing ever slows down here, right? I see a wick. I can see a wick forming right now, so they might be listening to me out there. Sellers, on the other hand, have absolutely zero proof and don't want to get caught trying to sell into this runaway market. So the best option for the bears is to wait for the next pullback to fail and then see if they can get their own pullback to hold for a big collapse back down to the lows. Now, this is when it comes to being a seller right now, this goes against all human tendencies. Right now, buyers want to buy, right? And of course, a little bit of experienced traders want to sell into this. We really don't want to do either one of those. When it comes to selling, there is so much open space below us that it makes no sense to try to force it or guess. You could flip a coin right now, right before we have proof, right? And guess, right? So stay patient if you're a bear right now and wait to see proof. For example, right, a lot of new traders would think, well, I'll wait for this red candle here and I'll sell the red candle. No, there are likely buyers, right, someone like myself that knows you're going to do that, and what I'm going to do is I'm going to buy into it, knowing that as soon as it starts to go higher again, you're going to freak out, you're going to cover your short, and I'm going to have an easy target right up to that high, right? We call that a strength trade, by the way, here in our trade room. And so you do not want to just try to sell this first red candle. Why? Because professional traders know you're going to try to sell this, and they're going to really make you uncomfortable most most of the time. Obviously, I can't predict what this one will be, right? But statistically speaking, though, a red candle in this type of move for a professional is seen as a buying opportunity, not as a selling opportunity. Again, like I said, this is going to be uncomfortably out of our comfort zone as human beings. So think like a trader who has control. The buyers have control right now. When can I sell then, Joe? I can sell when the sellers take control of this market. When would the sellers take control of a bull market? When we see the buyers fail and the sellers then take control. So as this market goes higher, just for example, right? As the market goes higher here, big run up, wait for the buyers to fail. That'll be the first chance, and then try to hold your own pullback on the opposite side, right? So here we have buyer failure. Okay, that'll be the first time you can be a seller. Yes, that'll be the most aggressive. The one you really want to sink your teeth into is once that pullback holds as it goes lower. Like I said earlier, you've got all this open space down here. What are you worried about 5 or 10 ticks for? Get the proof. Get the proof. The hard part is going to be right now staying patient. Because right now, those synapses are just firing, right? Like fireworks right now going, it's probably going to come back. It can't keep, oh yes, it can keep going higher, and it will. As soon as you jump into the downside, right, you know that's how these markets work. It will go higher, right? As soon as you get into the position. So stick to the plan. It's a bull market. Be a buyer until it turns into a bear market. Now, this is the tough part. Obviously, we're so high up right now. Being a buyer, right? I'm getting a nosebleed. We're so high up right now. And really, what you want to sink your teeth into right now is all of these support trend lines. The high of that channel is going to be the first one, right? So the high of that channel, line that up with the measured move. Okay, and that's where you want to be looking for the first one. The second one here is this one right here, right? That's another one. Okay, and then of course, the last one's going to be this one all the way down here, right? Back around that triangle. What I would be looking for right now, is I'm looking for counter trend sellers to try to fade this move because I know where their stop's going to be. And I can buy into that failure. So let's play devil's advocate here. If you're a buyer right now, right? Price pulls back to the measured move, the high of the channel. And what do we see, right? We're going to see sellers try to fade this, right? They're going to try to fade this move going back down into that range, right? Remember, like I said earlier, this puts a new trader in a position where you almost can't resist yourself. You want to sell that high. And I know this because that's how I blew my first account, right? Trying to fade big moves, right? So what I'm looking for now is can those sellers fail and can I buy into their stops? Again, when you're trying to sell into a big move like this, your exit, right? Your finger is itching on the exit button, right? If you're human, right? If you actually care about the money in your trade account and you're trying to sell into this parabolic move, you're probably going to be itching to get out of that trade, right? Cover your short position the moment this thing starts taking off against you. And so that's what you're trying to play against, either here or here. Now, the hard part here is that now you've got that measured move area acting as resistance. So this is going to be a bit of a balancing act here right now, right? Be a bit of a balancing act. So we're looking at the high of this channel, right? The high of the channel, seller failure, right? Going back up. That will be kind of the easiest one just because there's nothing in the way before we get to that 45.20 news target, right? If we come back down and we end up getting below that measured move will act as resistance. So watch out for, right? Watch out for that in the way. And then really at this point now, if we don't get these buyers to hold above the measured move or above this trend line here, there's a big wide open space down here now before we run into the moving average, right? The moving average coming up. And of course, before we run into, right, that rising support. So if you're a buyer, obviously we'd love to be buying down in these lows, right? We'd love to get this price down to these lows and then look for that, right, continue back higher here. One situation, remember, is that if we do collapse off this high, this becomes a bear market. So a seller failure at this point is going to be low reliability until the buyers can hold that pullback, right? Kind of think of it this way. right? Something like that. You can be a buyer here, but that's going to be low reliability because remember, it's a bear market at that point. Seller failures work great in a bull market, not in a bear market, right? In a bear market, look for buyer failures. In a bull market, look for seller failures. Does that make sense, right? So that will be the most aggressive. The most reliable will be the one after we hold that pullback. All right? And what happens a lot when you see these big moves, if they can't hold up top, then we get an overshoot into an overshoot. So sellers are going to be hunting for, again, sellers I think are going to be smart to be hunting for the triangle, but in all reality, I would imagine a lot of sellers have their eyes on that 43 half area, that 43, 47, just because of that pendulum swing, right? That swing up and then, of course, back down again, right? It's not going to stop right at the middle of that pendulum swing. So keep that in mind as well. This should be interesting. It's never easy. It's never easy here to be trading when you're at such extremes. So don't feel like a wimp for waiting for more proof, especially if you're a bear right now. Like I said before, you get plenty of room to the downside. So as these buyers now try to hold, right, as they try to hold, sellers now are looking to sell that back down. That will be the first opportunity. What I'd rather get, though, is that second one, right? Sellers here can sell into buyer failure, but again, that's oftentimes a trap. You oftentimes get more buyers waiting below that low. What I want to really wait for is for that move lower low after the failure, hold that pullback, and then everybody's selling, right? There's no question about it. The problem is that when this thing tries to pull back, if at first you don't succeed, it may just trap low and go right back up again, right? Buyers knowing that they get a much better entry price waiting for a failure, and the odds are still on their side. All right, guys? So sellers wait for proof. Buyers, careful here. Again, like I said before, when we get into these extremes, put yourself on the opposite side of the coin. Where will the sellers get a little bit too greedy, a little bit too aggressive, a little bit too human, right, and try to sell off that high? That's where you want to be looking for that buy going into tomorrow's. And again, this may happen in the next few hours here as the Asian system opens up. One last thing, don't forget we got news tomorrow at 10:30, so 10:15 is your cutoff. We'll be doing it together tomorrow morning in the trade room, so not to worry. Come out and see us. Boy, oh boy, I'll tell you, the star of the day today goes to the S&P. What a beautiful, right, what a beautiful opportunity here we had today on the S&P. We talked about this last night, right? The only way to be a buyer on this S&P was to get a breakout pullback above that channel high. Well, that's exactly what we got. Go back to the high of that range. Beautiful, beautiful, beautiful buyer failure off the high and back down to that low. Mwah! You can't get it any better than that, guys. We talked about that last night on the newsletter. Now, E-mini S&P is trading in a very similar situation as yesterday evening at the lows of a range, trying to complete the move to the low of that channel and with overhead resistance waiting above. Buyers will want to buy the lows of this range, but the top of the channel is in the way. How convenient. And sellers will want to sell the next pullback, but that forces them to sell the low of the range, neither of which is going to be easy ahead of this little news event tomorrow called the FOMC report. Just like we said yesterday, the buyers need to see a strong breakout pullback that can hold above the high of that channel and with a target going back to the range highs, while the sellers need to see either a strong enough move, they can get that moving average below the range, right, for that retracement trade, or they need to wait for a bull trap going back into the range and then sell it back down again tomorrow, right? Oh, and by the way, it all has to be done before lunchtime because volume will dry up ahead of that news report tomorrow, right? No big problem, right? This might not be easy here. We talked about this last night. What we needed to happen last night did happen, right? What we needed to happen last night did happen. It was actually a very, very good situation for really both sides, right? Buyers had a chance, sellers had a chance. It's trading inside of a range. And so remember, we talked about this last night. We talked about this last week here, right? When inside of a range, the range is always the most important thing. Right, so buying off the low, selling off the high, buying off the low, selling off the high. Okay, that's all pretty darn easy. If I'm a seller right now, I want to be really worried about selling the low. If I'm a buyer right now, I got this cute little trend line coming down off the high, telling me, "I dare you," right? I dare. He's kind of looking at me, going, I dare you. Try to buy this thing right now, right? That overhead resistance. So this is not going to be an easy job, right? If you want to be a buyer, just like we talked about last night, same situation, falling resistance, we need to get above that trend line, turn that trend line from resistance now to support, moving average comes over, and of course we get the right move back up to that high. What if you want to be a seller right now? The sellers are going to look for that to basically fail. The hard part about it is that we don't want to see the sellers sell into the low of this range. So for example, let's say we do get back up, we fail, now we're just going to worry about selling down into the low of that range. So make sure, right, we don't get stuck trying to sell into that 31.5 area. So really what you're looking for here for the buyers are pretty simple here. The only real reliable way for the buyers is get above the trend line, right? Get above that area, hold that pullback, and go. For the buy side, you could also mess around with a double bottom reversal off of the measured move and off the triple down, but that's always aggressive because you're buying into a bear market, right? If you want to, again, option number one for the buyers, buying above the high of that channel, right? Got to be a real strong move, hold that pullback. Option number two for the buyers, kind of similar we talked about on crude oil, right? Seller failure, breakout, pullback, just like that, right? Your first chance to be a buyer with that double bottom reversal. Again, those are always about a 50-50 chance, right? So make sure you get a big old target, small stop on that. The real one I want, though, will be, and again, this is very much what we talked about on crude oil, where at that point it's a bear market until we get that new higher high, hold that pullback, and then just watch out here to be trading into, right, the resistance there overhead. All right, guys? So we know we're looking there for the buyers. What if you want to be a seller right now? This is going to be tough. You know, at the low of a range, I have to see some real strong movement here for me to want to touch this thing to the sell side. If we see a real strong move lower, right, guess where we are? Yeah, knock, knock. We're already at the measured move. So this is going to be tough. I want to see a strong enough breakout to be able to get that moving average, right, to come down. But then we're at the low of the channel, we're at the low of the range. So the best way to do it's going to be buyer failure. Get those buyers, because you know what's going to happen here. The buyers are going to try to go back into that range, right? Look for them to fail, right? And that's going to be what I call kind of the okie doke, right? The rope-a-dope, the breakout pullback, right? It's a little bit, it's one more step, right, rather than taking a breakout pullback. You know, like I talked about on crude oil, when you find yourself in a position where you know the odds are not as stacked in your favor as you want them to be, such as selling the low of a range, for crying out loud, right? Put the odds a little bit further in your favor by looking for the opposite side traders to get stopped out. That way, when you're selling, the buyers are also selling, right, to get that move down. And then, you know, again, like I said earlier, I think what I would love to get here is for the buyers to try to run this up, fail, and then back down, because then that would allow me to sell without selling into the low of the channel, right? And there's all that profit now. The only problem is going to be where that happens, because I don't want to sell, right, into the low of that range, right? If you want to, you can go for a little scalp, right? A little tiny scalp on the way down, then try to hold a runner down there. But, you know, oftentimes when you see a market that doesn't have enough room to actually make the move, it will act as a self-fulfilling prophecy, and other traders won't join you on that, right? We need all the sellers involved, and if we're trying to sell the low of that range, it's not going to be easy pickings until we can actually get that breakdown. All right, guys? We got a good plan for the buyers. We got a good plan for the sellers. The sellers really, in my opinion, right now, really have the tough spot because they've got to get a strong enough breakdown without getting to the measured move, wait for a bull trap at the low of the range. We'll do it all together with all of our students tomorrow, but at least you guys have a plan in place and you know what to be looking for, those traps tomorrow. Let's get moving, Joe. Let's get moving here. Thanks for sticking around with me late tonight. Gold is range bound this evening. Shocker, right? Which is no surprise ahead of the FOMC announcement tomorrow. Why do I say that, by the way? Why do I say that gold being range bound is no surprise? It's because the FOMC announcement talks about interest rates. The interest rates, of course, affect the U.S. dollar. And of course, we have this kind of fundamental hedge or correlation between the dollar and gold, right? Because gold, of course, being being the gold standard, right? When the fiat currency goes lower, when printable currency goes lower, people seek refuge in gold, right? There's this fundamental kind of correlation to it. So that's why ahead of the FOMC announcement, right? There's no surprise ahead of this FOMC announcement tomorrow, right? That we're going sideways. This tells the buyers to look for seller failures at the lows, right? Buy the lows with seller failures, and sellers to look for buyer failures at the highs of the range while avoiding the temptation to trade in the middle. So much easier said than done. The bear channel is a decent clue that the sellers may have the upper hand for a move back to the lows tomorrow, where we assume the buyers will be waiting. And we can also see a failed attempt from the sellers to test the 13.15 area, which means they defended the hell out of that low, right? Which may give prices that nudge going higher tomorrow. As you can see, there's a case for price going higher and lower. Not to worry though. We don't need to know direction. We just need to know location. And right now we are smack in the middle of the range. So unless we are ready, unless you're already long off the range lows, we have no other choice but to wait for a breakout and then look for the failure. This is easy, right? As long as you can stay patient here right now. Again, what I think is the biggest clue right now is the fact that obviously we can see the range, right? It's a trading range, right? It's a triangle. It's all really the same stuff, right? We know we're trading inside of a range, right? What I think is the most important clue is this right there, right? So the fact of the matter is, that's not easy to do, right? That's not easy to do to keep that price from testing that 13.15. That tells us there were quite a few buyers defending this area, right? Enough buyers to overwhelm the sellers and prevent those stops being run below the 13.15 even. That typically results in rotation going back up to the high. At the same time, though, we have a bear channel. If you're a student of mine, right, you know that puts the odds significantly in favor of the sellers to revisit that low. So a little bit of conflicting situation right now. I'm always going to rely most on the range. The range, of course, being breaking the low. We should be going back to that high. How do we trade a situation like this? Buyer failure at the highs to sell it back down. Seller failure at the lows to buy it back up. We're looking for range rotation, high to low to high, high to low to high, back down to the low, back to the high, and we're going to focus on failures. As we go to the highs, I'm watching these areas of resistance overhead. These are very, very important. Right now, you can assume, well, maybe not as much today, just because tomorrow's FOMC report. We can assume, though, there are sellers with their orders parked right above these highs, knowing that it is statistically reliable that eventually it comes back down into that range. I don't like to play that game very much, though, especially not with new traders, because it's easy to make mistakes. So what I look for is for buyers to try to hold that pullback and fail, right? Watch out for these moves up here. We got the 24 over here, right? So buyer failure, back down, right? Seller failure, and back up. Tomorrow morning, it's going to be a very, very short window, very small window, and that window will close quickly 10:30, 10:45 tomorrow, if not earlier, on gold. The hardest part tomorrow is going to be staying away from the middle, right? You know what Mama says, don't fiddle with your middle, and that is definitely something, right, that I want to avoid tomorrow. So as of right now, unless you're already long off of that seller failure off the low, right, you're gambling right now, entering in anything right now until we get back up to those highs or those lows. All right, that's a pretty easy one. I've got some measured moves, right? And keep in mind, these measured moves are nothing more than selling opportunities off the highs with the proof, right? Buying opportunities off the lows, right? With the proof. And by proof, I'm talking about failures using the 2-try rule, which of course we teach in our advanced course tomorrow, right? So be careful with that. Avoid the middle, buy low, sell high. Boy, this euro is impressive here this week. Boy, oh boy, euro's bearish after successfully filling the gap from yesterday's low, and sellers not wanting to sell this low, will be looking for a bullish correction to sell, while the buyers, who have zero proof by the way, will need a strong break higher that can hold a pullback for a move up to the battle zone tomorrow. We have to assume in this situation that above every swing high are more sellers waiting. The two big clues on this chart are the spike in channel and the gap. The spike in channel tells the sellers to look for traps and buyer failures up at all the resistance levels overhead all the way up to the correction zone for a move back to retest the low. The gap fill, this is pretty interesting stuff. The gap fill tells us that we can expect buyers at the low, if not only just from sellers taking profit after the buyers fill off the highs earlier today. Sellers need to wait for a correction higher so they're not selling low, or they got to see a ton of strength through this measured move, and the buyers need to get back above the moving average, hold a pullback right above those channel highs if they want any chance of a move higher tomorrow. Now, we talk about this stuff all the time in our live trade room, and I'm always encouraging you guys here on the nightly newsletter to think not just buyers and opposite side sellers, but scalpers, day traders, and longer term swing traders. Now, let's think about this right now, because when I look at this chart, the first thing I think of is, whoa, that's a really strong bull move, and it came off of that seller failure that we talked about last night, right? Remember that move last night where we had that, right, measured move up? Remember we talked about that from last night's newsletter? Classic seller failure after a strong move, right? Strong move, seller failure, buy it back up, right? It's one of the big talking points from last night's Euro chart. Well, we got that, right? This big strong move, what does that big strong move tell you? Expect another, no, they never got it, did they? Right? So that real strong move here never succeeds. Now, for day traders, obviously for day traders, we never got the signal, right? For short-term traders, we never got the signal, okay? But I'm sure that there were traders here not paying attention, right, who bought this pullback. Right? Let's talk about long-term traders. Traders with big accounts that are going to be scaling into this move going lower. Right? We talk about this all the time in our chat room, and this is a really good example of it. Big strong move higher. Imagine now, right? There's a buyer here who's buying one contract and then buying two contracts. Now they're in a really bad position right now. Right? If I'm short one, I'm long one, right? And I'm long two, I've got 3 open long positions. What would happen right now if I bought 6 right here? Okay, no, I don't mean to make you think too much on this one, but I want you to think about what would happen. Okay, put the thinking cap on, right? I buy 1 here, I buy 2 here, I'm in long by 3. I buy 6 here. Where's my average entry price going to be? Right? 12,350, 12,150, 11,940. My average entry price is going to be right about, big round number, right? 12,000. What am I getting at right here? What I'm getting at is I'm trying to put you in a different kind of paradigm here. I'm trying to get you to think a little bit differently here. Think like a big lot trader out there, right, that can throw his or her weight around because they have a big account to do it, right? I see that big move going higher here. I say, all right, the odds are pretty good. I'm going to buy 1. Okay, trap low, I'll buy 2. Double my position. Oh, I'm wrong? Oh, don't take a loss. Just double it up again. Buy 6. What I'm getting at here is this helps a larger position trader double down, average in. Now all they need is to get a move back up. They can then exit their position for a profit, by the way, right? And then, of course, price typically then, of course, comes right back down again. This is what I'm getting at right now is, if you think about it that way, there are not only going to be sellers buying at this low, but wouldn't there also be long-term buyers who are, in order to avoid a loss, now doubling down, putting big lot orders here to basically move their average price lower so they can get out only paying commission Absolutely. We can assume that's going on right now as well. So what does that mean? Well, it really boils down to the same information here. It really boils down to the same strategy, right? If I'm going to be a seller, there's only two options right now. I need to run out all these big lot buyers, or, right, strong breakdown, pull back and go. Strong. How strong? Strong enough to get that moving average below that measured move. That's how strong, right? So really strong breakout pullback, looking for that double down target below. Unlikely, right? Not as probable, right, as the second, which of course would be a two-legged correction. The two-legged correction, right? The fuel on the fire is nothing more than the sellers taking profit and those big lot traders doubling down, right, and buying that low, right? At first you think, why would they wait to buy down? Oh, because then it brings their average price down, and then they can get out for a profit, when for the past 12 hours, they've been in the red. It's that easy when you have enough money in your account, right? And it's not fair. It's definitely not fair, but welcome to real life, right? If you've got the resources, you put them to work, and the financial markets are a great place to do it if you know how to do it correctly. Right? Remember, you can't just show up to the financial markets with a bunch of money in your account, right? Because it's like lottery winners going bankrupt, right? Easy come, easy go. If you don't know how to hold on to that money, you're going to lose it. So as this price goes higher, we assume sellers are waiting here to bring this price back down. Okay, so as the price goes higher, buyer failure, right? Buyer failure. Sellers right now know these statistics are pretty simple, right? And I want to be on the right side of the math. I don't want to sell here. I want to sell up in this area here because there's an 80% chance, right, that we go back down to retest that low. Now, what about being a buyer right now? What would you do about being a buyer? Well, first of all, the only real reliable way to be a buyer is after some significant strength. One way to do it would be to play a complete gamble here. Look for a double overshoot, right? Double overshoot, and just try your hand at buying off that low. Again, you're buying into a bear market, so it's not recommended by any means. It's very low reliability, right? That would be that classic double overshoot, right? Reversal. That again, it's about a 50-50 winner, right? So you make sure your target's about 3 times the size of your stop, and don't be surprised if you get a couple losses back to back on those types of trades. Okay, buying in a bear market, selling in a bull market, right? I sound like a broken record now, right? They're lower reliability. Really, this is the main channel, right? There's your main channel right there. So it's almost identical. We talk about for the S&P. I want to see this price jump. I want to see some significant strength, right? So strong that it prevents a seller like myself from even attempting to sell it, right? Big strong move oftentimes doubles up, and that'll put us into that correction zone. Be careful with that correction zone. Now, of course, we got tomorrow news at 10:30, so who knows what's going to happen, right? But then from there, breakout, pull back, right, and hold above it. So buyers either have, well, again, you're really the only two options here for the buyers right now are going to be after a strong breakout pullback. Either get to it early or get to it after the correction zone tested. But I wouldn't mess around with the top of that, with that battle zone at 12-230 or the correction zone, because that's where you're gonna have the meat and potatoes for the sellers coming in tomorrow. All right, guys. And again, I hope you guys learned something tonight. Hope we learned something. Look forward to earning something with you guys tomorrow. Now, I got a few more minutes of your time. Thanks so much for sticking around tonight. Don't forget, we've got one of the best free trials in the business. Join the trial on the homepage of our website. And don't forget, we got a great 3 levels of membership: beginner, intermediate, and advanced. I've got someone standing by to answer all your questions. And don't forget, if you got a lot of questions out there, our frequently asked questions page is a brand new page here on our blog, right? And it's got a lot of your frequently asked questions covered already. Check it out. Check it out. Don't forget, share this information with a friend, right? Don't hog all the good information to yourself, right? Share the information with a friend. Send me some feedback to jj@schooloftrade.com. And have a great evening, guys. Have a great evening out there. Be well out there. Be nice to each other. And be here tomorrow. We'll be in our chat room tomorrow, London session, in the trade room tomorrow with the U.S. session. And I'm going to get out of here right now because I appreciate all your time. I'll see you next time. Adios, amigos. Bye-bye.